Okay, I'm going to cover how to use the seasonality section in Magenta Trader. So for example, right here where it says style, I can either see it under the prices and seasonal where I'm seeing the seasonal trend, or I can just see it based on seasonality. Now what happens on seasonality, when I'm seeing here on the yellow line, I'm seeing the average of the last 10 years. So for example, if the stock has 10 years, it's going to show what the stock did on 2011, 10, 9, 8, 7, 6, 4, 3, and 2, and it's going to make an average based on the yellow line. Now I can see each individual year, and if I want to see, I could go to Window and I could load where it says Navigator, okay, and scroll down where it says Seasonality. You can see how it says Seasonality. I'll check Seasonality and I'll open the window. Now, if I put myself over any year, okay, you can see how the line turns white, and I could see, for example, what the stock did in 2011. Kind of went sideways to flat. Now, what the stock did in 2010, it went up. What the stock did in 2009, it went way up. What the stock did in 2008 went sideways. 2007 went way up. 2006 went up. 2005 went up, 2004 went up, and you can see you could go further. Now, let's say, for example, this year, 2007, something might have out of the ordinary might have happened to go way up, and I want to take it out of the calculation. Okay, I can just uncheck it, and I can see how does it affect the yellow line. Okay, does it still go up? Is the average still going up? So this is a very powerful tool where I can add or change years. So for example, 2008, which was an out of the ordinary year, and then I could see does it change the impact. I could switch it over to 6, and does it change this yellow line or the average line. Now, if I want to see it with the prices, I can go prices and seasonality. I always like checked having relative to current, which takes me to compares the price with the current seasonal, and I could see what is this. So for example, this is telling me that from now it bottoms out and the highest peak goes from now to April 8th. So this is a very strong time of the year for this stock. Now if I want to look at individual days, so for example, I'll go back to the data, and right here there's a scanner, and I could say show me positive, okay, and if I have 10 days, it's going to show periods of 10 days and their statistics. Okay, so for example, quickly on 10 days, I can see that we have a very strong 10 days on these two. Why? Because it does it 8 out of the last 10 years. It means it goes up 8 times and it's only gone down twice during this period. Now, if I want to see bigger time frames, all I got to do is change this period, for example, to 20, and now it's going to show me periods of 20 days, and this data will recalculate. You can see how I just recalculated the data. So it's telling me from January 25th to February 21st, it goes up 8 out of the last 10 years. Now, if I adjust it, say for example 30 days, it'll show me periods of 30 days that it goes to the upside. Now, if I'm looking for puts or periods that it goes down, I can switch this to negative, and it'll recalculate, and it shows me, for example, from April to June, this stock goes down 7 out of the last 10 years. And you can see this is a very strong time of the year where this stock goes down. So this is a good area to play puts. So the software quickly scans this information. Now you can see it gives me kind of a red on this area, but it's only gone up, and it got down 5 times, it's gone up 5 times, and when it goes down, it doesn't go down that strong. So the percentage of the time doesn't real coordinate. Now, what else can I do if I wanted to see both? Okay, it would load both. It would show me the best times that it goes up, best times that it goes down, and if I want to eliminate it, I can just put none, and it won't show me any data. Now, what else can I do? I can see seasonality comparing. For example, if I want to see, by default, it's going to show you when you're in prices in seasonality or you're in the seasonality button, it's going to show you 10 years. Now, if this stock has more than 10 years, for example, prices and seasonality for the last 15, it's going to show me 3 lines. It's going to show me a 5-year line, a 10-year line, and a 15-year line. Okay, and you can see overall, the season, you could compare how does the seasonality over the last 5 years differ from the average of the last 10 years to the average of the 50. Now, looking at this stock, it shows me that it goes up in the last 5, 10, and 50. If I want to go back 20 years, okay, it will also load an additional line, okay, and now I will have 4 lines. The season, comparing the seasonality of the last 5 years, 10 years, 15, and 20. Okay, let's look at another stock, for example, Apple. Okay, it's always a popular stock to trade here. And I can quickly, if I just look at the seasonality area, okay, I can see what are the strongest periods for Apple. Again, if I go to the Navigator section and I click right here, I can eliminate any year. I can see what did Apple do in 2011, had a big move to the upside. 2010 went to the upside. 9, 8, and you could compare each year to see the seasonal. Again, I could go back here to prices and trend, and I could see the prices together with the trend line. Or I could compare, has Apple's seasonality changed over the years? For example, how's the seasonal from the 5 years to 10 years to 15 years? Or I can load seasonality over more time frame. So for example, you're seeing here, Apple always tends to go up from now December to about April. We have a strong move on seasonal. Now if I want to look at the data, then I could just go to prices and seasonality. I can switch right over here to data. Remember, if any of these are not open, you can go right here to window, and right here you can find the navigator, window, and you can find the data. Okay, now I want to see, for example, what are the strongest 30 days, for example, that Apple tends to go up. Okay, now let's let it calculate. And you can see how it's going to show me 3 time frames when Apple tends to go up. Now we can see from the December 4 to January 15, it's gone up 6 out of the last 10 years. So that means it's a 60%. But it only goes up 7%. Now you can see from February 26 to April, Apple's gone up 8 out of the last 10 years, and it's gone up 14%. And then we have another good seasonal time for Apple, which is April 19 to May, was gone up 8 out of the last 10 years, 11%. So this time of the year is when Apple really starts to go up. So we have a very strong tool here with Magenta Trader to be able to find the best time of the years where the probabilities in your favor. If I'm more of a swing trader, I can do this analysis and find, say, 60 days. Okay, and let's see how it differs on a 60-day analysis. This data will calculate, and you can see from February 1st to April 25th, 80% chance of this going up because it's gone up 8 out of the last 10 years. It goes 18% on average when it goes up. And when it goes down, the 2 years that gone down, it's gone down less than 1%. So we know that the probability of this stock going up is very strong from now till April. Now, if I'm a more of a swing, I could even go up and maybe see a 90-day analysis. Let's see how it changes on 90 days. And we can see what are the best 90 days to be trading Apple. And you can see from January 25th to May 2nd, Apple gone up 9 out of the last 10 years. And when it goes up 26%. When it goes down, it only goes down 1%. Now, how do I use this? This helps me. If I'm going to trade this time, I know I have a big bullseye here where Apple has a high probability trade of going up during this time. So I could play a longer term option, and I know from now till this end of the stock, this end of this period, my probability is on my favor that Apple will go up again, especially if I use it in conjunction with other tools that I've shown. Like, for example, if the price is below the channel. Or we could use the 8T. Is the price breaking the 8T, the 50 moving average? Or is the price breaking out of the cloud? Okay, so when you use it in conjunction, what you're doing, you're using seasonality in conjunction with either the cloud or the 8T or a MACD divergence. You're putting the probability on your side. And that's all trading is. If you're constantly putting probability on your side, you're going to win more times than you lose. Okay, for example, let's look at ADM. And let's do a seasonal analysis of ADM. Okay, you can see how seasonality tends to go up during this time of year. Now let me go back to prices and seasonality, and I could say, show me the best 30 days to trade this stock. Okay, and let's just let it calculate for a second. Okay, it recalculates and it finds me 30-day periods. And you can see from January 11th to February 21st, this stock has gone up 7 out of the last 10 years. Now, if I'm more of a swing trader, let's say I'm going to look at a 90-day period. Okay, or let's say I want to look at a 60-day period. Okay, I'm going to look at a 60-day period and see if over a 60-day a swing trade makes sense on this stock. So let's let it calculate the seasonal, and I could find what are the best time of the year to play calls on this stock. Okay, and you can see how it switches from November 11th through February 19th. This stock has gone up 8 years and it's only gone down twice. So there's an 80% chance based on seasonality that this stock is going to go up. Now, if I use it in conjunction, so for example, there's one trade I placed and I used it in conjunction with the 8T analysis that comes inside Magenta Trader, I also see that we have a MACD divergence. Okay, you can see how we made a lower low in the market, but the MACD made a higher high. So that's a very bullish sign saying that the market's going to change to the upside. In addition, with this 8T, you can see the moving averages, and if I look at the 50-day moving average, which is the green line, it also broke the 50-day moving average. So I have a divergence. It broke the 50-day moving average. It's breaking the signal line, and I have very strong seasonality. This stock tends to go up. I'm in the best time of the year to be trading this stock. Okay, this is the way you take high probability trades, and it's very easy with Magenta Trader software to take high probability trades. You don't have to use complex. The software is doing this complex analysis, and you're putting, when you're in conjunction with 2 or 3 analysis, now you're putting high probability trades in your favor. And that's how easy trading is using Magenta Trader. Now let's look at, for example, Caterpillar. Okay, and let's do a seasonal analysis on Caterpillar. Okay, so if I go to Caterpillar and I do a seasonality analysis, okay, you can see how it's showing me this yellow line. This is the time of the year this stock tends to go up. Now let me load the prices and seasonality, and let me say, show me the best, let's say 60 days for this stock to trade. And look how it finds a nice period. So it's telling me from signaling the months, down here are the months, and you can see how it puts it in green. What is the best time of the year to be trading calls if you're using options on this month? This is the best time of year to use calls. Okay, so it's telling me from January to April, this stock goes up 6 out of the last 10 years. So we have a 60% on our favor, but you can see when it goes up, it goes 15%, and the 4 years that it's gone down, it's only gone down 1.25% here. So, and again, if I use it in conjunction with another analysis, I always like using seasonality with a double confirmation, because you want to put the probability. With the seasonal, you put probability in your favor. With another analysis, you put it even more in your favor. So for example, on this stock, I'm also seeing a break of the AT and a break of the signal line. So that's a very strong buy signal here. Okay, so the probability is on my favor that from now till April, Caterpillar is going to go up. Now, if I go, let's look at another stock. For example, ARO, which is the company Aeropostal. And I could say the software, okay, show me the best 90 days. You can see how I could just change this around. What are the best 90 days to be trading this stock? And it clearly finds that we're coming to the best 90 days to be trading this stock. Now, this stock has gone up 10 out of 10 years from December 24th till April. So the probability of this stock going up again is very strong. Now, it's gone up 100% of the time in the last 10 years. Every single year it's gone up. The probability using seasonalities that it goes up again is very strong. Now, if I want to add the probability on my favor, okay, I can see how we have a very strong MACD divergence. You can see how the market made a lower low and this made a higher low. So this is a very strong signal where this market wants to go up. We also broke the 8T. So we have strong seasonality telling this market wants to go up. We got a divergence, which is also very strong. And we have a break of the 50 moving average, which is also very strong. And if you're also a cloud trader, like I am, that use the cloud, we also have a cloud changing color. So, I mean, it doesn't get any higher probability than this trade. You have several confirmations. The correlation on this stock is very low. 22 means it follows its seasonality very, very, very well. Okay, so this is how we use the seasonality tool inside Magenta Trader. I'll see you in a future lesson. If you have any other questions, please contact our office or visit our website, magentatrader.com.